think Sandip Sabharwal needs no introduction. Sandip, plenty has happened. First off, let me talk to you a little bit about HCL Tech and the earnings from the tech space. How are you looking at the numbers? Would you say H2 and Q2 both there'll be a bit of a ramp up there, and management sounded confident as well. How are you reading into the numbers and the commentary?
Yeah, I think as we had been discussing earlier, the bottom of the IT cycle seemed to be here. Now what people need to realize is that this is no longer a high growth sector. So if people think that the stocks have corrected and from here we can make 30-50% kind of returns in these stocks, that's not going to happen. These are going to be very slow growing companies from here on. So we could avoid degrowth, but we'll be in a slow growth period at least for the next couple of years. So let's say hypothetically, if a company is growing at 3 to 5%, best case, then what is the price earning ratio you ascribe to that? That's something you need to decide. The good thing is that ownership has come down and positioning is low. So that's why my view is that from wherever the stocks were last week, a 12 to 15% kind of return is what we can expect from these companies. Which is not bad, but it is not something which is earth shattering. And that's how this sector will be, at least for the next couple of years, as the transition happens, as we see a sort of moderation in the kind of revenues they can generate, because the per hour billing, that story will no longer work. So I think it will become more fixed price projects, etc., as more and more AI agents come on stream. So I think that's my perspective. So given whatever the results are coming out and the outlook these companies are giving, the downside becomes extremely low. Upside opens up, but moderate upside.
No, excellent. Very clear, Sandeep, from your side. I just want to quickly ask a follow-up. So the 12 to 15%, is it a 12-month kind of a medium-term target, or are you speaking about the easy gains? And if so, how much of the easy gains are behind us and how much of the easy gains could we still have maybe over the next month or so as the results start to unwind?
The monthly predictions always tough because there are
Absolutely.
a lot of dynamics at work globally also, which are related to geopolitics on which we have no control. So I would say 25%, 20-25% of the move could be over. A majority of the move is still there. When I'm expecting a 12-15% return, I think it's on a 9 to 12-month basis. It's not immediate. Sometimes it's possible when positioning is very low, there are huge short positions, returns could come very fast, and then stocks could actually languish and go nowhere. So in what time period these returns come, sometimes it's very tough to predict.
Absolutely, Sandeep. Markets are never in our control. So point taken, but thank you. That again was clear. How do you play the theme? Do you play it by just buying ITBs? Say there's a viewer looking at it at IT right now, really wants to buy. Should we hop on right now through ITBs? Should there be specific companies you look at? Is it PEG ratio you look at? How should one play it?
I think ITBs is also a good idea. Otherwise, the large cap stocks like TCS and Infosys, I think they are less owned today than some of the mid cap companies, which could have greater risk related to particular clients, particular sector exposures. So I would think that the safer bets are stocks like Infosys, TCS. Of course, Infosys results are still not out, but I think the playing it through the Bs also is not a bad idea.
Very clear, Sandeep. Thank you for that. What we'll do is slip into a very short break, come back. We need to talk a little bit about Kalyan Jewellers because that one has made some phenomenal moves over the last 5 trading sessions odd, running up to today's day of trade. We'll discuss that on the other side. You want to stay tuned for this one. Welcome back. And prior to the break, we promised you Kalyan Jewellers. Let's try and decode that move. And Kunal is here giving us his view as to what's caused this kind of rally on the stock and how should one look at it now from a technical perspective. Kunal, over to you.
Thank you so much for that, Harsh. So gold is sparkling or not, not sure, but Kalyan Jewellers definitely is. I think in the last 5 to 6 trading sessions, the stock has moved somewhere around 40%. Now, what we went through a threadbare analysis of what actually transpired in the last 4 5 days and what has caused this kind of a rally for Kalyan Jewellers from those 370 levels to almost 500 plus where the stock closed yesterday. Now, interestingly, this is the price action for the stock in the last 5 7 days. As you can see, that there was an initial dip for the stock price, starting the month of July, where the stock corrected towards 360, 370 mark. But from there, what followed was almost like a parabolic or a vertical kind of a rally for the stock price, where in the last 4 to 5 trading sessions, the stock has gained almost 150 plus points. Now, we dwelled into two major data points or two major asset classes within the gamut of Kalyan Jewellers. One is on the F&O side. Now, this is very interesting. On 2nd of July onwards, till yesterday, 13th of July, we saw the net open interest for the stock. Now, for the futures. Now, apparently, the contracts which were open on 2nd of July, which is the start of the expiry, was almost 32,000 odd contracts. Now, till day before yesterday, which is still previous week Friday, the open interest for Kalyan Jewellers was still lying at around 32,000. So it was hardly any change in terms of the open interest, except for the day like yesterday, where there was a marginal drop in the open interest number. So that tells you that this was not a short covering kind of a rally for Kalyan Jewellers. Then what caused the real fuel for the rally? So we looked at the cash data. Now that is a very interesting aspect. Now this delivery volume data is very, very encouraging. Now again, you look at it from the start of the month of July, the average delivery volume for the stock was around 17 lakhs to 10 lakhs for the first couple of days. And that was the time when Kalyan Jewellers was going through that mild corrective phase. But then what transpired post that was a huge amount of spurt in the delivery volumes. I'm talking of the delivery volumes on the quantitative side. Now, till yesterday, the delivery volumes was almost 2 crores for the stock. Now, as compared to this historical average of 10 lakhs to 20 lakhs, it's a significant jump of almost like a 10x to 15x kind of a move for the stock price in terms of delivery price action. So this helps us conclude into the fact that this was not a speculative or a short covering kind of a move for Kalyan Jewellers, but this was pure delivery based buying. So it tells you that if there is no speculative kind of a move, then this is not short covering oriented. The second and the more important part, if it's delivery based buying, which happens into the stock, that generally causes or indicates that there's been an institutional price action into Kalyan Jewellers. And we've seen historically multiple times that when rallies are led by institutional price actions, they are the ones which tend to sustain quite significantly.
Okay, thank you so much for that, Kunal. So, likely to sustain, Sandeep, I wonder how you look at Kalyan and how you look at the differential between a Kalyan and a Titan. I know you have very strong views, Sandeep. You believe that some of these jewelry names are trading at elevated valuations and likely, even in terms of store footfalls, etc., you seem quietly negative with regard to some of those metrics. But now at sub 40 times, does it at all interest you, enthuse you at this point?
I think there are many jewelry companies where on in their showrooms there are no customers, but they show sales. So we cannot compare them with Titan or Tanishq. I think that's a genuine company. So I think I'll rest my comments only on that. I think these kind of speculative moves should not enthuse anyone because it shows clear, like these are weird moves. These, like, although Kunal might have a view that this is institutional led and there could have been some institutional buying at lower levels, but these are very, very speculative moves, like stock moving 50, 60% in just a week or so. So I think it doesn't happen in well established companies generally, unless there is a very positive fundamental development, which we do not really see here. So I think people should be careful. People have got stuck in many speculative stocks in the past and then they find it difficult to get out. So, like everyone should take a considered view.
Okay, that's the take coming in Kalyan Jewellers. Don't be mesmerized by that move. At least that's what Sandeep's take is. Sandeep, curious to know, how is it that you're looking at Grasim's mega acquisition into the renewable energy space?
I think the Aditya Birla Group unfortunately tends to make too many large scale acquisitions, entry into unrelated areas, etc. And that's why you don't get returns from stocks of this group, and the only company which has actually done well there has been Ultratech Cement, which has uh, also diversified, but then cement still remains the mainstay. So I think this entire solar space is getting very, very overcrowded. ROEs and ROCs are very low in this segment and could actually reduce further as overcapacity builds up over the next 2, 3 years. So I wouldn't be very enthused if Grasim by itself is putting up such huge amount of money.
Sandeep, what's the outlook for other companies, other renewable companies that you see, especially companies which Adani Green is one of them. You have Tata Power also having a a sizable renewable portfolio coming in. NTPC Green is there.
Yeah, so I think if you look at the capacity expansion which have been planned in the renewable energy space and the way demand growth is there in India, there is a clear, significant overcapacity building up, not only in the manufacturing side for modules, but also in the for the utilities in terms of the projects they are implementing, their ability to sign PPAs with utilities for the capacities they are setting up, etc. So, uh, with the newer projects coming up with BESS, they could have some advantage over the older projects also, which don't have energy storage systems, and there the PPAs have already been signed. So, I think the return ratios will keep on deteriorating from here on. And that is what concerns me because typically in a sector, once return ratios start deteriorating, typically stock returns also don't tend to be positive.
How are you, Sandeep, how are you looking at some of the textile names, and especially from a Make in India perspective, and with everything that's happening around tariffs, how should one look at the space? I come from a place where PDS has won another order. I mean, from a French retailer, the FOB, of course, for the French retailer annual is around $250 million. That's obviously large, even given PDS's size. I'm trying to get a sense whether an investor should hop on at this point into any of the textile names and try and play this opportunity.
Yeah, textile is a good opportunity. Last year, we got the textile companies got disproportionately hit because of the tariffs which were there specifically on India. Now there are global tariffs, and with the rupee depreciation, there are clear benefits. Plus, some FTAs are coming up, like with the UK, it's already implemented. With the EU, it will soon get implemented. US at some stage will happen. Now, the risk is that for US exports, now there's talk of this 12.5% tariff due to Section 301 investigation, etc. How that goes, we don't know. So I think a lot of these things just come up suddenly and get hit us, and then becomes difficult to predict. But on an overall basis, I think the textile industry seems well placed because we have a natural advantage of uh, cotton fiber being available in great abundance, and that has been a positive. But then, due to various tariff measures and advantages which other countries enjoyed, uh, we typically the industry did not move as rapidly as it should have. But I think now the opportunity is actually there.